What's the smartest way to finance a pool without hurting your long-term finances? Well, adding a swimming pool can completely transform your home. It creates a space for family time, entertaining, and lifestyle enjoyment, and in some cases, it may even improve resale appeal. But pools are expensive, and in-ground pools often cost on average of around $50,000 or more, depending on size, materials, and features. So before diving into construction, it's important to understand your financing options. Now in this video, we'll walk through the 4 most common ways homeowners finance a pool: paying cash, using a pool loan, tapping a HELOC, or doing a cash-out refinance, and will help you think through which option aligns best with your financial goals. Why is pool financing something homeowners should think carefully about right now? Home improvement costs have risen over the past few years, and pools are no exception. At the same time, many homeowners have built significant home equity, especially those who purchased or refinanced when mortgage rates were lower. That combination creates opportunity, but it also creates risk if financing decisions aren't made thoughtfully. Borrowing against your home or taking on new debt can impact your monthly payments, your long-term wealth, and overall financial flexibility. So understanding the true cost of each financing option is just as important as choosing the pool design itself. Option 1, paying cash. Is paying cash the best way to finance a pool? Well, paying cash is often the simplest and least expensive option over the long run because there's no interest, no monthly payment, and no added debt. If you have enough savings to cover the full project cost while still maintaining a strong emergency fund, cash can provide peace of mind and eliminate financing complexity. However, draining a large portion of your savings for a pool could leave you financially exposed if unexpected expenses arise. The key is balance. If paying cash leaves your overall financial safety net intact, it can be a strong option. But if it significantly reduces your liquidity, financing might provide more flexibility. Option 2, pool loans. How do pool loans work, and when might they make sense? Pool loans are typically unsecured personal loans designed specifically for swimming pool installation. You borrow a fixed amount and repay it over a set period with consistent monthly payments. Because these loans are often unsecured, meaning your home isn't used as collateral, interest rates may be higher than home equity options. The benefit is that your house isn't directly tied to the loan. This can be appealing for homeowners who don't want to tap into home equity. However, it's important to look beyond the monthly payment and evaluate total interest paid over the life of the loan. Longer terms may lower the monthly cost but increase the total amount repaid. How does using a HELOC compare for pool financing? A home equity line of credit allows you to borrow against the equity you've built in your home. Unlike a traditional loan, a HELOC functions more like a revolving credit line, meaning you can draw funds as needed during a set draw period. And because it's secured by your home, HELOCs often offer lower interest rates than unsecured loans. This can make them an attractive option for larger projects like a pool. However, since your home serves as collateral, missed payments could create serious consequences. Additionally, many HELOCs have variable interest rates, which means payments can increase if rates rise. For homeowners with strong equity and stable income, a HELOC can offer flexibility and relatively lower borrowing costs, but it requires disciplined repayment. Option 4, cash-out refinance. What about using a cash-out refinance to pay for a pool? A cash-out refinance replaces your existing mortgage with a new, larger loan, allowing you to receive the difference in cash. This option consolidates everything into one mortgage payment, which some homeowners prefer for simplicity. However, refinancing comes with closing costs and resets your mortgage terms. If your current mortgage rate is significantly lower than today's rates, refinancing could increase your overall housing cost. A cash-out refinance generally makes the most sense when mortgage rates are favorable or when you plan to stay in your home long enough to justify the upfront costs. What are some common mistakes that people make when financing a pool? So one common mistake is focusing only on the monthly payment instead of the total long-term cost. A lower monthly payment stretched over many years may look manageable, but it often results in more interest paid overall. Another misconception is assuming that home equity options are always cheaper and safer. While they often carry lower interest rates, they also put your home at risk if payments aren't made. The smartest approach is to compare both the monthly impact and the total repayment cost before deciding. How can you figure out which financing option is right for your situation? Well, start by clarifying your priorities. If minimizing total interest and avoiding debt are your top goals, paying cash may be the best. If preserving savings matters more and you have substantial home equity, a HELOC could provide flexibility. If you prefer structured, predictable payments without using home equity, a pool loan might work. And if mortgage conditions are favorable and you want to combine everything into one payment, a cash-out refinance could make sense. Your timeline also matters, so how long you plan to stay in the home should influence your decision. So what's the best way to finance a pool? There isn't a single right answer. Each option, cash, pool loans, HELOCs, and cash-out refinancing, comes with its own advantages and trade-offs. The key is understanding how each one affects your cash flow, your long-term costs, and your overall financial stability. For more mortgage education, home equity guidance, and helpful tools, visit themortgagereports.com. And if this video helped you think through your options, like it, subscribe for more housing insights, and let us know in the comments. How would you finance your pool project? Thanks for watching.